Have you ever looked at your company's spending and felt like you were staring at a tangled mess of receipts, invoices, and spreadsheets, completely unable to make sense of where all your money is actually going? You're not alone. In today's fast-paced business world, understanding and optimizing your spending is no longer just a good idea, it's a critical component of survival and growth. Without clear visibility into your expenditures, you're essentially flying blind, leaving money on the table, missing opportunities for savings, and potentially exposing your business to unnecessary risks. Think about it. Every dollar your company spends, from paper clips to cloud infrastructure, leaves a digital footprint. But capturing, cleaning, and making sense of those countless footprints across different departments, vendors, and payment methods is a monumental task for most businesses. This is where spending analytics comes in, and specifically, why a robust platform like Rogers Spending Analytics is becoming an indispensable tool for forward-thinking organizations. So, what exactly is spending analytics? At its core, spending analytics is the process of collecting, categorizing, and analyzing an organization's expenditure data to gain insights into spending patterns, identify areas for cost savings, improve efficiency, and enhance procurement strategies. It's about transforming raw, often chaotic financial data into actionable intelligence. Historically, this was a manual, painstaking process, often involving armies of analysts sifting through stacks of paper or dozens of disparate digital files. The insights gleaned were often outdated by the time they were compiled, making proactive decision-making nearly impossible. But the game has changed. The advent of advanced technologies, particularly artificial intelligence, AI, and machine learning, ML, has revolutionized spending analytics. This is precisely where Rogers Spending Analytics distinguishes itself. It moves beyond traditional, reactive reporting to offer a dynamic, intelligent, and predictive approach to spend management. Imagine a system that automatically pulls in all your financial data, no matter where it lives: your ERP system, accounting software, credit card statements, expense reports, even individual invoices. Then, imagine this system not only categorizing that data with incredible accuracy but also identifying anomalies, flagging potential fraud, highlighting opportunities for better vendor contracts, and even forecasting future spending trends. That's the power of Rogers Spending Analytics. It's not just a reporting tool, it's a strategic financial partner. Let's break down how Rogers Spending Analytics works, step by step. It's a process built on three fundamental pillars: data integration, intelligent classification and enrichment, and actionable insights and reporting. The first pillar, data integration, is perhaps the most crucial starting point. Many businesses struggle because their spending data is fragmented. It's siloed in different systems, each speaking its own language. Rogers solves this by offering seamless integration with a wide array of existing financial tools and platforms. Whether you're using popular accounting software like QuickBooks or Xero, enterprise resource planning, ERP, systems like SAP or Oracle, or even just managing expenses through corporate credit cards, Rogers can connect to these data sources. This means a comprehensive, holistic view of all your spending, eliminating manual data entry and reducing the chances of errors. It's like having a universal translator for all your financial information, bringing everything into one centralized hub. This robust integration capability is what truly enables a single source of truth for your spending data, which is foundational for any meaningful analysis. Without it, you're constantly chasing fragmented pieces of the puzzle. Once the data is integrated, we move to the second pillar, intelligent classification and enrichment. This is where Rogers' AI and machine learning capabilities truly shine. Raw spending data, even when consolidated, can be messy. You might have office supplies listed as office stationery in another system, or travel expenses might be broken down into individual airline tickets, hotel stays, and taxi fares. Manually categorizing these can be a nightmare, and often leads to inconsistencies that skew your analysis. Rogers' AI-powered engine automatically cleanses, normalizes, and classifies your spending data. It identifies duplicates, corrects formatting inconsistencies, and, most importantly, applies a consistent classification taxonomy. This means that whether an invoice is Adobe Creative Cloud or Photoshop subscription, Roger recognizes it as software subscriptions within your defined categories. This automated classification goes beyond simple keyword matching. It learns from your data, adapting to your specific spending patterns and improving its accuracy over time. But it doesn't stop there. Roger also enriches the data. This means adding valuable context that isn't immediately apparent from the raw transaction. For example, it can pull in supplier information, contract terms, payment dates, and even link specific purchases to projects or departments. This enrichment turns simple transaction records into rich datasets, providing a much deeper understanding of each expenditure. Imagine being able to see not just what you spent, but who you spent it with, under what terms, and for what purpose, all automatically linked and organized. This level of detail is invaluable for strategic decision-making. Finally, we arrive at the third and perhaps most impactful pillar, actionable insights and reporting. Having clean, well-classified, and enriched data is great, but its true value lies in the insights you can extract from it. Roger's spending analytics platform transforms this data into clear, intuitive, and actionable dashboards and reports. You can customize these dashboards to focus on what matters most to your business. Want to see your spending by category? Done. Need to identify your top vendors? Easy. Curious about department-level spending variations? It's all there. Roger provides a myriad of pre-configured reports, but also allows for deep dives and custom report generation, empowering users to ask specific questions of their data and get immediate answers. Beyond standard reporting, Roger leverages its AI to proactively identify key opportunities and risks. This means identifying savings opportunities. The system can pinpoint instances of maverick spending, purchases made outside of approved channels, highlight duplicate payments, or flag opportunities for consolidating vendors to unlock volume discounts. It can even analyze your contract compliance, ensuring you're getting the best terms you've negotiated. For example, if you have multiple departments buying similar items from different suppliers at varying prices, Roger will flag this, allowing you to centralize purchasing and negotiate better rates. Optimizing vendor relationships. Roger provides a comprehensive view of your spending with each vendor, allowing you to assess their performance, identify opportunities for renegotiation, and even evaluate potential risks associated with over-reliance on a single supplier. You can see how much you're spending with each, how consistently they deliver, and compare their pricing against market benchmarks. With that said, thanks for watching, and until next time.